Welcome to Be the Boss of Your Money. We're just getting started. Lots to talk about. The market, the stock market, just inches away from all-time highs and giving us investors the confirmation, the bravery, the courage to move stocks higher. We need to hit it soon because I don't think we can tread water for too long before investors start giving up the ghost and go home. And we're going to talk about more meme stock madness. Wow, did you see Clover today? We're going to talk about all these things, and we're going to have a really good show today. So let's get into it. Thank you so much for joining me. If you're just tuning in now, I'm Mitch Goldberg. You're watching my live stream. It's called Be the Boss of Your Money. It's about personal finance and helping you learn lots of lessons about money, about credit, about investing, about risk management, all of these things which help you become the boss of your money, because it's very easy for your money to become the boss of you. Couple of things to talk about today while you're watching. Of course, while you're watching, if you have any questions, hit me up in the comments. You know, I love to hear from you. If you're watching this in the replay, if you're watching the replay, definitely hit me with your questions as well as if you're watching this in the live stream. I will see your questions. I will get back to you, and I would just love to hear from you. Words of wisdom, words of encouragement are always appreciated here on Be the Boss of Your Money. So a couple of things to talk about, and I want to make sure we don't leave anything out, but I also want to make sure I respect your time and move through this as quickly as I can without mumbling my words. So we've got a whole bunch of things going on. We've got this dynamic going on right beneath the surface of the stock market, right beneath the surface, where we've got questions about FANG M stocks, Facebook, Amazon, Apple, Netflix, Google, Microsoft. I'm thinking we should replace the N, Netflix, replace it with NVIDIA. Thinking about it, maybe that's what we should do, or just add NVIDIA to the mix. But then I'm just starting to throw in large cap stocks. But anyway, what we need to pay attention to is this. Are the Amazons, Facebooks of the world going to keep moving up? Now, Facebook has been doing, in my opinion, all the heavy lifting in the FANG M stocks. That's really the only one that's been solidly hitting new highs. It backed off a little bit today, but still, that stock was like 265 recently when Justice Department was thinking about going after Facebook and breaking it up, and people got nervous and started to sell. And now here we are at 333. So it's like a $25 stock going to $33 a share. And then we have the craziness in meme stocks. And I do call it craziness. This is not the new norm, by the way, guys. If you want to know my opinion. Okay, if you want to know my opinion, the meme stocks, the way they're trading now, is not the new norm. This is not how the market's going to always be going forward. This is not emblematic of a permanently changed market. This is just about speculative froth. I want you to know I turned 30 in 1997. So I was in my low 30s, 97 to the year 2000. And, my age cohort, we were hitting them out of the park. We were making money on stocks, doubling, tripling, just crazy moves. And you know what? We thought we were so enlightened, but it was just another speculative bubble passing through the tube. That's all it was, right? And that's what we have now. This is not the new way it's going to be. It's just temporary. It gets to a point where you take so much risk that you're taking so much risk that the odds of an accident happening are so high that eventually you crash and burn. And that's what I see going on now. But there's a whole new generation. If you're watching this, and I'm not trying to insult you, a lot of my friends are new to markets and investing, and they're sending me emails and commenting on my social media posts like they really know something, like it's really, I'm not saying you don't know anything, but, people telling me that, the technology is there. It's just a mass adaptation. Look, we had mass adoption. I should not mass adaptation, mass adoption of the internet in the early 2000s. It didn't stop the stocks from cratering. Okay. Just because there's mass adoption in something doesn't mean the stocks actually do well. I don't know if you know that or not, but it's all a cycle anyway. So we need to repeat that. Hopefully history doesn't repeat itself, but it will. It always does. So let's just take a quick look at some of the stuff in the market, share my screen with you, pop myself up here, and I'm going to make this a little bigger so that you could see what I'm looking at. Okay. All right. So the Dow is off 30 points. No big deal. We've got a couple of potentials in the Dow. Microsoft is in there, and so is Boeing. And I think if anybody's going to lead us to new highs, it would be those two particular stocks. NASDAQ up 43 points. Okay, a decent day. Tech had a good day, starting to act a little bit better. S&P was up a drop. We're talking just below all-time highs. Gold off a little bit, no great shakes. Oil, $70 a barrel. So oil continues to strengthen. Crazy thing is some of the oil stocks that you'd expect to see do a little bit better. They just haven't gotten there yet. All right. So, and then let's take a look at the 10-year Treasury. The yield continues to drop, 1.53. What's with that? If you're really worried about inflation, don't you think the 10-year Treasury should be higher if you're worried about too many dollars chasing too few goods? Devaluation of the dollar, don't you think the 10-year Treasury would go up? This is one of the reasons why professionals like me take a look at a lot of things in the market and say, yeah, there's a really good reason that inflation will be transitory. The dynamics of a few industries have changed, like restaurants. VIX up a drop, still under 20. And I've got you here. Let's just take a look at crypto. Crypto had a pretty miserable day. All right. Let's get to cryptocurrency. That's not what we want. It'll just give it a second. Okay. Crypto. Okay, so Bitcoin down almost 7%. All right, Bitcoin's down to about 33,000. I don't know if you care to take a look at Doge, but that's down to 33 cents. I don't see how like a Dogecoin or an XRP or Litecoin, I don't see how any of those coins move if the, if the institutional one, that's the Bitcoin, if that's not moving up. And a lot of good news with Bitcoin. I know a lot of people talking about, El Salvador, the country of El Salvador might adopt Bitcoin as legal tender. The size of the economy of El Salvador is, it's not even a footnote compared to the United States, certainly in the globe, right? In the global economy. So if someone accepts Bitcoin there, I don't think it really is enough to move the needle. I hear, Uruguay might also adopt Bitcoin as legal tender. We'll see. But today, the big news is this, okay? Bitcoin falls after U.S. seizes most of the colonial ransom. I've said this before on the show that Bitcoin is not anonymous. Everything is on a ledger. It's trackable. I'm not saying it's easy to do, but it's trackable. The money was found for the colonial pipeline. I think it's a great thing. Definitely instills some confidence. And this is just another reason why maybe Bitcoin isn't everything people think it's cracked up to be. And as far as Bitcoin being a currency, there's no way a currency could be worth 30,000, 67,000 on someone's tweet, Elon Musk, and then back down to 33,000. I'm not putting my money in that. I mean, that's like, so I have $60,000 to buy something, and now it's worth $33,000. So by the time I get around to paying for something, what if I'm buying real estate with it? Real estate doesn't close automatically. It could take a month, could take 2 months. Sometimes real estate transactions, they take time. I'm not going to risk Bitcoin going down. Yeah, I know I could convert it to the dollar right away when I think I'm going to need it and get it into dollar reserves. But then that takes away the whole point of being in Bitcoin as a store of value, though. So that's food for thought if you're into that stuff. Let's keep going. There's some big headlines today. Let's take a look at Amazon, Apple, Google, Netflix, Microsoft, Facebook. A little more down than up, but I want to show you this line over here. You see where my cursor is? Netflix, 593 and 406, the high and the low. It's a little bit lower than midpoint. And if you just looked at these stocks, I don't think they look so great anymore. I mean, the chart on Amazon does not look that great. The chart on Apple is not looking so good. Facebook is the only one to me that looks really good. Google looks good, but the rest of them look like breakdowns. That's how they look to me. I know a lot of people are going to disagree with me on that, and that's okay. That's what makes it fun. Let's take a look at some of the industrials. All right. United Rentals, Wabash, Korn Ferry, Johnson Controls, Southwest. Good day for airlines. But generally speaking, I'd like to see Southwest above 60, but UAL up. Okay, good day for some of the industrials. Let's take a look at the sectors. Which sectors did best? I don't want to get into the meme stocks. Energy led the way. You saw a gallon of oil, $70. Discretion, real estate, industrials. What's on the bottom? Utilities, staples. Financials were kind of weakish. So that brings me to something else. If financials are weak, okay, and if you see that financials are not constantly showing momentum, then it just might mean, how's that? That's pretty cool. Then it just might mean that maybe investors are starting to lose confidence in some of these stocks, or maybe that they're thinking maybe things are as good as they get. Maybe things are as good as they're going to get. And we maybe it's time to take some profits in some of these stocks. By the way, if you took some profits in some of these industrials that took off, if you took some profits in some of these financials that took off, I don't think there's anything wrong with doing that. Just like we were talking about taking some profits in the work from home, stay at home stocks, take some profits. And then you saw how these stocks tumbled. Once in a while, you take some money off the table. You don't have to buy something right away. You could just park the money in some cash equivalents or something while you wait. But that's one thing you could do. But there's news today. This is breaking news right now. Okay, I'm going to just put this on the screen. Okay, now let me go to camera 4. All right, breaking news. The Biden seeks new coalition for infrastructure bill as talks with key GOP senators fall apart. I'm not sure how he's going to put together an infrastructure bill, but one of the bullish scenarios for the stock market was we're going to have this $2 trillion infrastructure package. That's scaled back a lot. Now, maybe we go back to the near $1 trillion package that the Republicans came back with, which maybe now you're thinking, well, that was pretty low, but now maybe if we could get that, we should. There's going to be a lot of debate, and you have to wonder. How this is going to hurt the market tomorrow. I'm curious to see what the pre-market is doing for that. Okay, stocks it's pretty benign reaction in the pre-market, and now what I want to do is I want to just take a quick look at the meme stocks because Clover was up huge today. We'll go to meme stocks. I have meme stocks all the way at the bottom, here. Meaning no disrespect, by the way, just that it's kind of a newer phenomenon. And I had these stocks in other stock lists, but I wanted to put them together now. So AMC, brother, if you have any questions, hit me up in the comments. AMC finally stopped going up. GameStop back up to 300. So up $20 today, up 7%, doing great. Bed Bath & Beyond holding up. Cost holding up. Clover, though. Clover and Wendy's are the standouts. Clover was up $10, but I think that stock was like, in the 6s and 7s maybe 2 months ago, month and a half ago. So that stock has rocked, and that is part of the meme stock / Reddit / Wall Street bets thing, where people find, typically speaking, thinly traded stocks with big short positions. Now that they see they could do it, they gang up, they buy them, the stock goes up, more people buy them. Then I think, I know institutional investors also get involved because they want to make some money on the action. And it just becomes a feeding frenzy. And this is why I call it the greater fool theory in these meme stocks. People buy them strictly because they expect someone else to pay higher for them. I don't know how many people actually know what these companies do. I don't know what makes these companies suddenly worth, double or triple what they were over a week or 2 weeks or even a month or two. It's tough to say, but Wendy's up 26%. I mean, Wendy's is a real company. Bed Bath & Beyond is a real company. Wendy's is probably the highest quality company. The others are all, I think, questionable as to their survival. But what happens is these stocks go up so much that the companies can issue new stock into the stock market. They do a secondary issue. They raise hundreds of millions, if not billions of dollars. And all of a sudden, they clean up their balance sheet and they become survivors. And in some cases, hints of not just survival, but of thriving. And then they go up more, or that's what holds them up. That's the way it's been working out until people come to their senses and say, why am I paying up for these stocks when I could buy a Boeing or a Honeywell, or if I want to take a shot at a real high growth stock, super high growth, like overvalued, but still I think a good company could be like a DocuSign, a DocuSign or a Zoom or something. But this is not the norm. And, it's easy to say that, but some people are going to watch this and say, oh, you're just talking, you're not making money in these stocks. I'm doing quite well. You don't have to throw me a benefit. But as far as the meme stocks go, this is just 1999, 2000 all again. We saw a biotech speculative frenzy, a small oil company speculative frenzy. We see these from time to time. But ultimately, if fundamentals don't come around, investors start to sell. Like, look what's happening to Dogecoin and Bitcoin. When they do start to go down, it becomes a race to get out of them just as quickly, if not faster, than a race to get into these stocks. So you could diamond hands AMC, you could diamond hand Clover to the moon, but ultimately you're playing with fire. I would not be the one who tries to squeeze every penny out of these trades. These are not investments. These are stocks that you borrow, you play with them, and you get out of them. Okay, so that's what I see. So without further ado, I don't know, did I say adieu? Adieu. I thank you for watching. This is my live stream, Be the Boss of Your Money. I'm going to call it a day now. It's getting pretty ominous outside, so if you're on the road in my neck of the woods, Northeast, please drive carefully, and I will see you very soon. Thanks so much for watching.